All right, good evening, everyone. This is where I do my weekly market review. Just do some technical analysis and show you guys what the charts are showing us. So this is Tim Davis from the Bullish Bears team. For those of you guys who join me live, welcome. And for those of you guys who are catching this on the recording, welcome to you too as well. And before I get started, I have to do some technical stuff here. A little bit of housekeeping, then we'll go get started. All right, so I hope you guys can see my screen. And just bear with me 1 second, folks. I got to put a quick reminder here. 1 second, folks. So we get started here in 1 second. All right, almost there, folks. Give me 1 second here. We're going to get started here. All right. All right, folks. I think I'm ready now. So a little bit later, join a little bit later than what I wanted to, but nevertheless, I'm here. So if you guys are catching this on recording, welcome to you. If you guys are catching this on live, welcome as well. And for those who are joining me on live stream, welcome to you too as well. So this is Tim Davis on the Bullish Bears team, and this is when I do my weekly market analysis. Well, I just break down some chart actions, show you guys what the charts are showing us, long-term and short-term. And just to give you guys some insight so you can prepare yourself for the upcoming week. All right, but before I get started, I got to make sure that a couple things are already in place, and then it is. I got to make sure I'm recording, so those can catch us on my recording. And I like to start off just like this. Let me see here. All right. So here's my full disclaimer, folks. I'm not a financial advisor. I'm not a stock guru. I don't have a crystal ball, so I cannot predict the future. And what can they only offer possibilities or probabilities? No one is perfect, therefore no one is 100% correct 100% of the time. I am a longer-term momentum trader looking for possible momentum built up in one direction or the other, coupled with a little unusual option activity and a good chart setup. Remember, the trend is your friend. Take a little from everyone and develop a method that works for you. I'm always looking to limit my risks, so don't bet it all on what you cannot or don't want to risk. And remember, this is trading, not investing. Should seek a financial advisor or investment firm for investing advice. And just for you guys who are catching me on live, because I'm still trying to get used to this. If you have any questions, you can type them, or if you have any comments for me, you can type them. I will review the YouTube a little bit later, but I won't be able to do it live here for you guys. And for those of you guys who are part of the Bullish Bears community, you are a paid member. You can always type me a message in the large caps Discord room. And if you are here live, one of our members, and you are here with joining me tonight, type me a message in the large caps Discord room and just let me know that you can hear me loud and clear, and you can see my screen as well. All right. So with that said, I will go ahead and dive right into this. A lot of things transpiring. We got earnings is about to start, and the markets are still, struggling with that 50-day moving average. So most major indices drop below that 50-day moving average. And I'm going to start off right here where we're at now. We're going to start taking a look at I'm going to look at the futures since futures are running. So what I got on my chart, what I got on my screen now is the daily chart of the NASDAQ. It's daily chart of NASDAQ futures. And the blue line that you see I have displayed here is my 50-day moving average. And as you can see, price action is still below the 50-day moving average. And, it's kind of struggled last week to get back above it, even though we had a couple of green days. And I think we ended with a green week. If you look at price action, we are still hovering below the 50-day moving average after that fall below the 50-day. And let me back this up here a little bit and show you guys a little bit of history. So if I was to draw this out, the last time we really spent any, I guess a short period of time below the 50, I want to say that was back in May, earlier this year. Right here, we spent a little bit of time below the 50, and again back in March. That's on the daily chart. Now let's glance real quick at a monthly chart, because I really like to show people the bigger picture. And this is what I've been, showing probably all year, the bigger picture. Moving averages act like magnets, especially the 50-day, the major ones, 50, 100, 200-day, act like magnets. And I like to continue to point that out is because even on the longer term charts, the weekly and the monthly, those moving averages still act like magnets. So I always like to see the distance between price action and the 50-day moving average on the monthly, weekly, and daily charts. And what I've always noticed is that when you get so far away from the moving averages, normally there's a check back. You see one here, moved away from the 50-day on this monthly chart, and we check back to the 50 before going higher. There was one here. And then we had to go way back here, probably 2016, before we see like another meaningful check back. So I like to point that out on this monthly chart, because after that big rebound from the COVID plunge in 2020, we rallied hard away from that 50-day, and the 50-day never caught up. So one or two things are going to happen. Either the 50-day is just going to come up to price action, or price action is going to come down to the 50, or they're going to meet somewhere in the middle. Okay. If you look at the TTM squeeze on the monthly chart, you see we're starting to get our first dark blue bar, meaning that the momentum to the upside could be slowing. So if it was my guess, I would say that price action will probably come down and meet the 50-day moving average somewhere in the middle down here, maybe even at the level where we broke out from 2020. So that's something to keep in mind. That is a possibility. All right. That is how the daily chart and the monthly chart of the NASDAQ futures look. And as you can see right now, NASDAQ futures are showing a little weakness already. And we'll switch over to the Dow Jones futures chart. Again, folks, if you are paid member and you are joining me here live, remember you can type me a message in the in the large caps chat room on the Discord, and just let me know that you can hear me and you can see my screen. That way I know everything is going as planned. All right, here is the monthly chart of the Dow Jones futures. All right, again, the white line is just a trend line that I drew probably about a week or two ago, just to track the overall uptrend of this longer term monthly chart. But the blue line is still my 50-day moving average, and you can still see price action is quite a bit of ways from the 50-day. And again, it acts as a magnet, even on the long-term charts as well. Let's take a glance at our daily chart. Now, on our daily chart of the Dow Jones futures, again, price action here also is below the 50-day moving average. Challenged the 50-day moving average last week on that big rally for a couple of days, but look where price action went right back up to that 50 and stalled. And it's like it's trying to be rejected there. So that's something to pay close attention to. That looks like we're trying to get a rejection from the bulls, and the bears are trying to take over again. So we could be looking for a possible pullback if the bulls doesn't pull this out and avoid this rejection. But it looks like it's starting to get rejected right at the 50-day on the daily. Let's take a look at the S&P E-minis futures. Same type of scenario here. Again, price action is now below the 50-day moving average pretty convincingly too recently. It's just been drifting below that 50-day. Every time we drift below that 50-day, we try to rally back up to it on some big days, and then we just kind of like stall and start to pull back. All this volatility, folks, is a good trader's market, but it's also a sign that maybe the market is trying to make a change in direction, overall change of direction. So keep that in mind. Drew this trend line here to show a longer term upward trend line that we've been in. And it looks like we bounced off that trend line precisely around the beginning of the month. Rallied back up to the 50-day, and that's where we stalled out at. So we're still stalling out up to 50 even on the S&P E-minis futures chart. All right, taking a glance at the monthly chart again, see how price action is well off of the 50-day moving average, and just been going up in a straight line since the COVID plunge, and a great distance away from the 50-day. So something to pay close attention to, because again, it acts like a magnet. And then look at the candle that's being formed right now on the monthly chart. Well, the previous candle. So the previous candle, not the one we're in now. The one we're in now is still showing green, but the previous one was a red candle on the monthly chart. So will we finish October with another red candle? We shall see. Right now, the bears are trying their best to overtake this rally from the COVID plunge. So that's something to pay close attention to. All right, now let's take a glance at the Russell as well. So here is a monthly chart of the Russell, another one that I've been tracking all year long. And the Russell 2000 has been in a extremely tight range since April, almost beginning of this year. So look at this monthly chart. Right around about March, it just got wedged into this very tight range, and really hasn't done much of anything except for stayed in a range since April. But if you notice how wide the range was back in April and March, look how tight the range is now. All that signifies to me is that this tight range is about to be resolved one way or the other. And start to get our first dark blue bar on this monthly chart, meaning that the momentum to the upside is possibly losing steam. Here's our daily chart of the Russell 2000 futures. And you can see the white lines I drew here is the actual range that we've been trading in. And every time we hit the bottom of this range, we got a little bounce, but we've been struggling to break out of the top of that range. We either hit the 50-day moving average and pull back to the bottom of the range, or hit the top of the range and just pull right back to the 50-day. This range is getting tighter and tighter and tighter, as you can see. So there's a resolve coming soon. Will we break out of the range to the upside, or will we break down below the 200-day moving average, which is this red line here you see? So again, the bears are trying to find a way to overtake this rally from the COVID rally that started back in 2020. So that is all three major moving averages. Let's take a look at the VIX futures. All right, here is the daily chart of the VIX futures. And what I want to point out, okay, that's something worth keeping an eye on. Again, this blue line here is my 50-day moving average. Notice how the VIX was in a range too at one point. It continued to bounce with the bottom of this range, which is white line I had here. But around about August, there was a big, nice spike in the VIX. The VIX gapped up and reached the 200-day moving average, attempting to close above it, and it pulled back. But notice that it did not pull back to the bottom of this range. We have not spent time at the bottom of this range since August. So the VIX has been staying elevated, right up around or above that $19, $18 range since clearly, getting that final bounce away from that $16 range. We have not visited that range since. Now you got price action now on the VIX trying to establish a firm support level above the 50-day. So we pulled back, got a nice gap up above the 200-day and the 50-day around the 20th of September. We pulled back right at the 50-day, got another little bounce. Then we was range bound, stuck in a range for a few weeks, and now price action on the VIX right back to the 50-day, and it's like it could be threatening another push higher. If you notice that the 50-day moving average has been going up, creeping ever so closely to that red line, which is our 200-day. If this blue line crosses above this 200-day, so if the 50 crosses above that 200-day, that's called a golden cross within the trading world, which is a bullish move. So that's something to pay close attention to. Now I'll take a look at a weekly chart on the VIX. And also here we see that we've been in this tight range on the weekly chart, but the VIX is finding a way to try its best to close above this range on the weekly chart. So that's something to pay close attention to in the weeks to come. All right. Now, let's take a look at the indicator or the tool that I like to use that tracks the overall momentum or the sentiment of the current market. That tool is, folks who follow me on a regular basis, you know what that tool is. It is the SPXA 200R, which is the percentage of S&P 500 stocks, companies trading above the 200-day moving average. And this one, folks, I've been really honing in on this and tracking this one since March. And I keep pointing out how the overall sentiment of the market has been really attempting to fade. So this chart or this tool shows the percentage of stocks that are above their 200-day moving average within the S&P 500. So this number you see here in this little white box, that's 97. So we were 97% of S&P 500 stocks were above their 200-day moving average back in April. As of Friday, this past Friday, look where we're at now, 64%. So, stocks are really starting to fall off the bandwagon and drop below that 50-day moving average, and at an accelerated pace now. I'm sorry, yeah, below the 200-day moving average at an accelerated pace. And in this chart, I also have my personal exponential moving average lines to track the overall movement and seeing what the overall momentum is doing. And notice how, my 50-day moving average, it is starting to curve like a sphere downward. If this crosses below the 50-day, if this crosses below the 200-day moving average, that could be extremely negative for the overall market. That's what the daily chart looks like. The weekly chart looks like. Here is a look at the current daily chart. So on a daily chart, you notice that my 50-day exponential moving average is already crossed below the 200-day. So the percentage of stocks trading above their 200-day moving averages is getting weaker and weaker every week, and struggling to get back above this 50-day exponential moving average. Something to pay close attention to. And last but not least, we'll take a look at the monthly chart, which is could be a positive sign for the bulls. We have to see how that pans out. So since we've been trending down with this tool, with its percentages slowly but slowly dropping away from this 97 percentile target that was hit earlier this year, back to the major moving averages on this monthly chart. It looks like price, the percentage move is trying to make a stand right here, but the momentum and the TTM squeeze is trying to win. So I think this month is going to be a telltale sign for the overall market. Going into earnings, there's a lot of things that can affect this market. As you guys know, we still have a major global supply chain issue. COVID is still an issue. We got U.S. debt looming. That could be an issue. U.S. debt ceiling, that could be an issue in the coming months. So there's a lot of negatives that are actually going against the overall market and economy globally, not just here in the United States. So there's something to pay close attention to. All right. Again, if you guys are here joining me live, I'm gonna type a message. I just want to make sure that my members are actually here and they can see and hear me loud and clear. Make sure everything was going well, because I'm just about done here. But I want to make sure that somebody who actually was in our Discord were able to see and hear everything before I dive into my. What's going on? Awesome. What's up, brother? Appreciate you, Kev. I hope that information I helped you with the other day was useful. All right, so now, awesome. You're welcome, man. So a lot of you guys who've been following me, you know that I've really been switching gears here since I've been seeing this weakness in the overall market. So I had some positions that I've been holding for a while, and some of them are very profitable now, and it's about time to cash them in and roll out. I mean, roll up and roll out and take some profits. And I'll share a couple of those here with you guys now. This is, you'll get a general idea of what I've been doing with my personal portfolio. And so I have been trading some put spreads, quite a few of them here recently, on the SPY. I added another put spread on SPY not too long ago. I want to say last week. And right now, I want to say all of my all of my put spread positions, probably with the exception of 1 or 2, are all in the money. So I know a lot of folks got their own trading style. Some folks are not keen with holding positions for weeks and months at a time. But everybody has their own style and a unique way of trading. I like to look for trend, overall trend. So I look at the weekly chart, look at the monthly chart. I'm looking for a longer term trend change, something that I feel comfortable, jumping into a overall trend and maybe hang out for several weeks or a couple months if that's what the overall longer term trend looks like. So I'm still holding SPY puts. Recently picked up another one, but I'll show that one here in a second. So I still have a SPY vertical put debit spread. It doesn't expire to November the 19th. So I got to November the 19th to be right. Bought the 430 strike puts and sold the 422 strike puts against it. And just looking for 100% profit. That's my first target. Second target, if we continue to dwindle or drift lower, would be 50% profit. And just paid $222 for this contract. And if we take a look at the SPY ETF, you will get a general census of what the overall trend is, not the immediate trend, but the overall trend. And I got to get rid of these short-term lines I got on here. But matter of fact, now let me keep that there because I want to show you guys something here. All right. So here's a 4-hour chart. of the SPY. And what I've been tracking here, oh shoot, didn't mean to do that. Hold on one second. All right. So what I've been tracking here in the short term is how price action and the moving averages, how the 50-day moving average on a 4-hour has been slowly but surely drifting towards the 200-day. Not good for the overall market if you are bullish on the SPY. If you notice these lines I drew here, I drew them for somebody, I want to say about a week ago, and I was showing how we have been since dropping below that 50-day moving average on the 4-hour chart. We've been getting rejected at the 50-day. And I was showing someone also how you can actually, now one thing about this volatility that we're saying, it is a great trading strategy if you know how to trade gaps. Not when we trade these, when you're looking for gaps, normally when there's a gap in the market, especially on a 4-hour and a daily chart, I really like to hone in on those because a lot of times those gaps fill, and they only fill almost 80 to 100% of the time. For instance, here's one right here where you could trade these with swing trades in and out of the market, especially when the market is showing so much volatility, and you could be profitable in both ways. So on this 4-hour chart, we see, let me circle this. There was a gap in the market here on the way down. When we dropped below the 50-day, we gapped down all the way down to the 200-day. But then price action reversed. 9 times out of 10, when you get those gaps, a lot of times they reverse and they fill. So this would have been a good trading strategy. If you saw this gap down, we hit the 200-day, more than likely it was going to reverse and bounce, and that's exactly what happened. You could have traded that move right back up. But the 50-day was definitely acting as an area of resistance. So that would have been a great place to trade this, make this trade on the way up and possibly close it right at the 50-day. You could have, traded once we hit this, started stalling here at the 50-day, you could have bought puts on the way down, then you could have switched right around and bought some type of bullish strategy on the way back up to the 50-day. And look what happened again, another gap. About a week later, here's another gap down. I'm just not gonna highlight that. I got most of it. So you get the picture. There's another gap here when we hit that 50-day, we dropped again, gap down again. This time we dropped just below the 200-day, but 9 times out of 10 gaps fill. And what happened? We struggled around here around the 200-day for a minute. And what happened? Voila, gapped up again. Here we go. Gap got filled. And then what happened? When this price action gapped up around, I want to say this was sometime last week, gapped up to that 50-day, it created another gap. So what's more than likely, what is a probability of directional next week? Well, my thought process is that this gap will fill. I kind of highlighted that here already. So I'm thinking this gap will fill back down towards that 200-day. That's the shorter term aspect. That's how you can trade this if you want to do some swing trades. But looking at the bigger picture, I believe that for now, the SPY has lost pretty much this 50-day moving average. It is starting to become a strong level of resistance at this 50-day on a daily. So it looks like every time now we've gotten towards this 50-day, we have been failing. So we could see another fail this coming week. You already got a red candle already, so we could see a fail and move back towards an area of support. Oh, you're very welcome, Kevin. You're very welcome. So that is my logic behind the put spread that I have on the SPY. Now, I jumped into another one on this week because when I and this is the reason why, and the logic behind the one I just got into, another put spread on the SPY. This one expires 29th, and I'll show that here in a second. Is on that one, I'm really targeting this gap area. So when I saw this gap up on Thursday or Friday, I saw the gap up, waited for price action to start to stall, and I got in on this trade on Friday, if I'm not mistaken, playing for a gap down, or plan to fill this gap, should I say. That's a shorter term trade, and I'll show it here in a second, but that was my logic for put on that second spot put that I recently put in. I think I shared it with our members. All right. So here's another position I've been in. Been in this one for a while, and I actually added another one to go along with it. IYR. This was one that I saw that was extremely overbought several weeks ago. So I jumped into a vertical put debit spread on that one. This one got to December the 17th, but I'll probably be out of this one maybe next week. Already up about 120%. If things go my way, I'll probably be closing this one out next week for about a 200% gain. So we have to see how that works. But this was a put debit spread on the IYR. Expires December the 17th with the 110 strike put, and I sold the 100s against it. And I was actually targeting a actual stock price target on this one. So the first target I was looking for is see if we can drop below 105, drop to 105. Second price target, looking to see if we can drop below 100. Got into another one with this one. I saw the overbought action start to dwindle, and we start to drop out of the overbought area. So I bought another position of the IYR put with the put spread with the same exact expiration, but I just bought the 105 strike put and sold the 101s against it. This one I was targeting, same price target, all right, 103 for the first target. Second was 101. Now, if you look at IYR now, it too rallied with the market last week, but it did not go back up to that 111 price target, which is where I first jumped in this position. So I've been in this position since we were at 111. Now we're down to about 103. So I'm just looking for one more washout, and then I'll be able to close this trade with the max profit. So that's another way you can play. You can play these overbought stocks or overbought positions, especially if you pay close attention to these market charts. I'm telling you, it be giving me more confidence to buy these puts in overbought territory. On a monthly chart, IYR definitely had a big gap, there's a big space between price action and the moving averages. And last time we had that big space, it was what happened last year, and there was a big gap between price action and the moving average last year. So there's another one on the monthly chart, another big gap between price action and the moving average, and we are in overbought territory. So gave me more confidence to play this for a longer term move to the downside. And okay, let's take a look. And here's our weekly chart. As you can see, it's just been rolling in my favor for quite a bit. So I'm looking for price action to possibly hit and test that 50-day moving average on the weekly chart. That would be my exit area if we continue to go in that direction next week. Now I'll probably close both of those out and look for another target. So that's the IYR. EEM, I'm still holding this position. This one is in oversold territory, so I think I got to take a look at it. I do expect possibly a bounce on EEM. I had to look at that again, but I currently have vertical put debit spreads on this one as well. Doesn't expire until December the 17th. Ended up buying the 50 strike puts on this one, and I sold the 45s against it. Looking to see if price action can drop below 49 for the first target. Second, looking to see if it can drop below 45 and just pay $80 a contract. But it's been in this one also for a few weeks now. And the EEM right now is EEM. So we're hovering right around just below 51 bucks on our weekly chart. So what I'm looking for here, because this one also on the weekly also is struggling to retake this 50-day. So what I'm looking for next week is see if we get one more push down towards the 200-day. We get that push over the next week or so, then this is another one that would grant me a profit. And I still have until December for that to work out. So I'll be holding that one for a minute. All right, the triple Qs. Now the tech sector, guys have really been paying attention. When we started to last week, tech sector started to really get another hit. And I think it's just because of the threat of tapering and the possible threat of rise of interest rates over the coming years or so. So that wasn't a great I guess pretty much threatened the tech sector a little bit more last week. And plus the tech sector probably was more overbought than a lot of them if you look at the longer term charts. So this one was a vertical put debit spread that I put on, was in this one also for a couple of weeks. I bought the December expiration. What I did here is I bought the 365 strike puts and sold the 355s against it, looking for price action drop towards 355. First target is 365, second target 355, pay 262 contract. So as long as we get below 360, I mean, yeah, to 265, all right, this one should be a winner as well. Get below the 365, I'm sorry. So on the Qs, take this to a daily chart. So this one has already hit my first target, dropping below 365. So this one is already profitable as well. And we're back to challenge that 50-day moving average again. So if it fails here and drops and breaks the support where we have started to reverse from right around at 353, probably ready to take profits on this one as well. If we drop down to the 200 deck, I'll probably end up taking maximum profit. So that was already profitable too as well. And let me see, I think I got one more to share with you guys. Okay, so here's the two of the most recent ones again. I got this other SPY vertical put debit spread, I want to say on Friday, after seeing a lot of bearish activity within the options market, as well as the SPY continuing to struggle to retake the 50-day moving average. So that's when I put on another position in the SPY. I bought the 440 strike, and also there was a gap up in the market. So again, I'm playing the gap down, playing for a gap back down to, or not even a gap down, but I'm playing for the gap up to be filled with price action movement towards the downside to fill that gap on this coming week. So I bought the 440 strike put, sold the 430s against it. Target here is looking for 100% profit, and for the first target, second target 150% profit. It's paid 251 for that contract. Again, if you come in late, if you see the SPY on the I want to say it's the daily, but you can see it better on a 4-hour. There was a gap up in SPY last week. Let me remove this trend. Let me remove this triangle. Triangle. So there's a gap up in the market. 9 times out of 10, normally gaps fill. So what I'm playing for, we got the gap up in the market, and we had a gap down in the market over here. And if you notice, this gap here that I shaded in, it was filled right here with this move up here. So now what I expect is that this new gap right here will be filled by price action retreating back towards the 200-day. That's my expectation, is to see this gap get filled. And then I'll be ready to close that one out as well. All right, the ARKK. I think somebody asked me about this one last week. Now, this one also it will probably be hurt by the overall tech sector. If the tech sector continues to struggle next week, I think the ARK fund would also struggle. I'm going to show you this one also, the trend on this one has switched. I mean, it's in a downtrend, and I think it probably remain in a downtrend until they hit a major moving average. So I bought a vertical put debit spread on this one, doesn't expire until October the 19th. Bought the 110 strike puts and sold the 105 strike puts. Again, targeting around 100% profit. Second target 150% profit. Paid 175 for this one. So this was, I'm looking for a quick move on this one to be in and out of this position. And right now the ARK fund, it too is also stuck below major moving averages. And it looks like it's starting to get, and it's got rejected again by its 50-day moving average on a 4-hour. On a daily chart, almost at a point where the 50-day is possibly ready to cross below the 200-day, which is not a bullish move, that's a bearish move. And finished the day on Friday with a big red candle with a gap below the market again. See that gap? Gap up. We gapped up on last week. And more than likely, this gap will probably fill. So I'm looking for that gap to fill next week. And I'll be ready to close that one out as well. All right. So, oh, you're very welcome. So that is all I have to share with you guys for this week. Keep in mind, folks, earnings. We are approaching earnings again. So it's that time of the year. A lot of folks get excited about more volatility because earnings is about to be reported. And I think the big banks up first. And just while we talked about big banks, there's one that I got my eye on. I think it's a bank. Is Blackstone? Is that a bank? I'm not even sure. I think it's part of the financial sector. Blackstone. I got my eye on Blackstone, and I'm going to show you a reason why. I think we could see a near-term bounce, but Blackstone. Look at this monthly chart on Blackstone. I do think it's in favor of the bears. Here's the monthly chart of Blackstone. And this is a lot of bearish action up here on this monthly chart of Blackstone. So we could see a near-term rally, but I think Blackstone is possibly heading back towards the 50-day on the 200. I'm sorry, on this monthly chart. So that one, I'm really paying close attention to see what happens on this coming week. Here's our weekly chart of Blackstone. Slowly but surely drifting towards the 50-day. Here's the 50-day. That would take price action right around $92. Right around $92. I may be looking to jump into this one sometime next week with a possible put spread. So keep your eye out for that one. All right, folks, that is all I have to share. Hopefully, this was something that you guys can use. Start with okay. That's all I have for you guys. Hopefully this is something you guys can use. Enjoy the rest of your weekend, folks. Again, let's take a look at the futures just for the heck of it. And right now, let me go to a 4-hour chart. And right now, futures are battling with the 4-hour chart. They're battling with that 200-day moving average. So that is our, this is a look at our 4-hour chart of the Dow Jones futures. And we are battling again with that 200-day moving average. It battled with it back here. And when it jumped back above it and it failed. So now we had another battle and right at a level of resistance. Battle with that 200-day moving average. If it does not prevail, it could fail again. So that is the current look at the Dow Jones futures. Let's take a look at the current look at the ES, which is the S&P E-minis futures before I go. And it too, right now, as it speaks, 4-hour chart also beginning to have another struggle with the 200-day moving average. Last time we rallied up to the 200-day moving average on a 4-hour, this is what happened here. Rallied up to the 200-day and we pulled back. We rallied up to the 200-day again last week, and look where we're at now. Looks like we are trying to challenge, but it's starting to fail again for a second time over the past 2 weeks. And looking at the NASDAQ, 4-hour chart on NASDAQ, same scenario. Rallied back up on last week. Nice rally in the market. Back up to where again? 200-day moving average. We challenged it once around the end of September. Challenged it here. Failed. Found some support. Almost at the just below 14, around 14,400. Rallied again, and look what's happening now. It's another struggle right at the 200-day again. That is the NASDAQ. Russell 2000 is still in its own range, and I think the Russell also is looking like it's starting to struggle at a level of resistance. Here's a range that I've been tracking. So every time we got close to that range, we had a pullback there. Hit the range there, got a pullback, not quite to the range, but already starting to pull back already right there on the Russell. And One last look at our VIX futures. And we'll notice on the VIX, so the VIX is still trading below its 200-day moving average. So that's something to pay close attention to. If the VIX get a spike, it can gap back up above the 200-day. But if the VIX fail, that would be good for the overall market. So we have to see how that pans out. Right now, VIX is hovering just below that 200-day on the 4-hour chart. So tomorrow should be interesting. For matter of fact, the rest of this week is going to be a very interesting week with earnings being starting to kick off. All right, folks, enjoy the rest of your weekend. I hope you guys saw something you guys can use. You're very welcome, sir. Yep, you're very welcome. You guys have a great evening. Have a great week, and I will catch up with you guys throughout the week and catch you guys on next weekend. Toodaloo.